Welcome to Swing Trading and Coffee, YouTube's mellow corner for traders. My name is Anthony, and in this video, I am going to give you a trade review on Micron and how I managed to squeeze 675% out of this trade. I'm going to walk you through all the steps, exactly what I was thinking every step of the way, and how I chose my exit. First off, we gotta zoom out a little and see big picture how this stock has been doing over the past couple of months at least. You'll see that here back in June, we had a peak here at 157. And then we came back down, tried to bounce back up. That didn't work. And then we had a much more extended correction to the downside. Now, around April, we started to stage a reversal here. And then as you can see, we're starting to have this stepwise pattern on the weekly chart. And I'm going to switch back to the daily so we can see what happened more recently. So as you can see here, we had this big move up and we had this massive gap here at 144, 145. And when you have a gap like this, it tends to get filled. And what that means is eventually the price action will come down, fill this gap before reversing back up. Now, gaps have about a 75% chance of being filled. It's not set in stone, all right? Now let's take a measurement of how far we came from the bottom to the top, all right? So from here all the way up top, this was about a 49% run. Very impressive move in barely, from September to, October, okay? Now, I hadn't gone in on this move. I wasn't following Micron at that time. However, once it started coming up here and it rejected, and then we started seeing a little bit of a push up, I started questioning if this was going for a breakout. However, it never got through the previous high, so I was just sitting, waiting to see what happens. It started to come down, and I was like, okay, maybe we can get a fill of the gap here, and we'll come down to this line in the middle, which is the 21 EMA. Now, in swing trading, when you have an uptrend and it's like, going up stepwise, you can take a long off of a pullback to the 21 EMA. And, if it comes down to 21 EMA and bounces, that could be a signal for a long. However, there's more to it than that. You have to look at the chart as a whole. You have to figure out how much momentum you have in the move. Because if the momentum is fading, you don't want to take it. Now, looking at what happened after that is we started to bounce from here, and we saw a first green candle in 4 days, okay? Now, when I saw this first green candle, I started thinking, okay, we may have found support because we have this level back here, which held. So maybe we are going up for a push. Of course, I still don't know that this was all going to happen. I'm just watching it. I decided I'm going to buy options on this for a $180 strike. So I'm targeting the 180, and I'll tell you why I targeted the 180. I bought 2 weeks out, and when you buy options that are 2 weeks out, they have a lot of volatility, and you can make a lot of money off of them. But also, you can lose all of it. So you have to have the appropriate position size. Now, once we had our second candle up, I'm like, okay, so we didn't make it down to the 21 EMA, but we bounced off the 13, right? When you have a bounce off the 13 like this, that tells you that the momentum is strong. It didn't even need to have a big pullback to the 21. Sometimes you even have pullbacks to the 50 EMA or even just breaks, and then, you lose the uptrend. Now, once we had this second candle here, that for me was confirmation that we have found the bottom, right? So when this happened, I added in a little bit more. And then once we had this breakout right here at 170, once we've broken this previous high, now it's, we're going up, known resistance levels up ahead. So we have to figure out how much we're going to aim to get out of this trade. right? So now I'm in this position with high leverage, 2 weeks out strike on the 180. Now, one method is called the Fibonacci extensions, right? And I have them plotted up here. And if you're not familiar with them, I'm going to explain them to you in just a second. So the Fibonacci sequence is a mathematical sequence where each number is the sum of the two preceding ones, okay? So what that means is you have this ratio that keeps expanding more and more. And you see these ratios in nature, like in flowers, plants. It's even used in architecture. It's a well-known ratio that exists in nature. So likewise, movements in the stock market do have some ratios that tend to repeat over time. It's not always an exact science, but you can watch how a stock reacts when it is at that Fibonacci target level. Now, the way to find the Fibonacci is you go up here into trend-based fib extension. So what you need to do is you take the beginning of the move, the absolute beginning, to the top where it reversed, and then the bottom where it reversed off of here. And this is going to give you levels on the chart. Now, I may have, moved these lines a little bit slightly, so they're a little bit different. There you go. So the first one is the 0.618. This is, one of the more likely targets that in swing trading I aim for. And then the next one, which is a little bit less likely, is a 0.786. And then you have the 1.0. Now, I'm going to explain to you what the 1.0 is. Now, if we draw a line here to measure this move from bottom to top, and then we take that and we extend it from the next bottom here, we could get, if we have a very strong move in a stock, it can get to replicate this move up here. And this is called a measured move. You take this and then you move it up here. Now, when you do the measured move, it also corresponds with the 1.0 Fibonacci level. So targets, when you're taking a swing trade and there's a lot of momentum, the 0.618, you scale out of it a little bit or even before it. And then as you go up, you scale out more. Now, I played this trade very aggressively with a 2-week expiry on the options. So, when I was up around here, I was already up like 200%. So, or 250%. So I took off a couple contracts. Went up more. I took couple more contracts. I started to see a little bit of resistance. Took one more off. And then here I had maybe like 1 or 2 contracts left. And then it rejected. It went through the 0.618. And this is, here's your proof that these levels do something on the charts. At the very least, traders know they're there and they look out to, scale out at these levels. So, even if you don't believe in, that the Fibonacci is applying to stocks, but traders use it, so you have to be aware of it. Now, by the time I got up here, I was already up 675%. I mean, this could continue. Tomorrow, Monday, market's going to open. This could continue up. However, I felt like I got more than I wanted out of this trade. And then if we do get a pullback, I could go again for another round to the top. All right, so let's take a quick look at how I scaled in and scaled out. So I bought 5 contracts at 255. And then we had an intraday pullback to support and it bounced off. I saw it on the intraday and then I took another 3 contracts onto my position. So now I have a total of 8. And then once it hits $7.90, I'm already up, I already tripled the size of the position. I'm out 3 contracts, okay? Now, I didn't just lock in profit here. I'm practically sitting in a free trade at this point because even if I lose the remainder of the position, I'm still up, right? And what you can do here is you can move your stops to your entry. So whatever average price you paid, whether it's for shares or for options, you can move up your stop loss. Afterwards, went up to 850, scaled out one more, 1170, two more, $15, one more, and then, finally when it started to reject off of the 0.618, I took off the last contract. One last thing before I leave, guys. This channel is new. It's only been around for a month, and so far we've hit 500 subscribers. That is well beyond what most channels do in their first month. Just so you don't miss any updates, be sure to hit the subscribe button. I do put out about 4 videos a week updating you on all the trades that I am watching, and the trades that I'm actually in, I break them down for you so you understand what's happening in the process. Catch you guys in the next video.